Now to be joined by Britta Von Oesen, who is Managing Director with CohnReznick Capital. And we're going to have a great discussion here today. I think it'll be very informative. Before we jump into some of the Q&A that we have planned, I just wanted to go around and do some quick introductions. My name is Joseph Tripke. I'm a partner here at Liam Research. Liam Research, if you're unfamiliar with us, is a firm that covers energy holistically with primary data and research as well, written research. So we cover shale and wind in the US, and we also cover the solar market, both residential solar and utility scale. So with that, I'll turn it over, Britta, to you to introduce yourself as well before we dive in.
Thanks, Joseph. Hi, I'm Britta Von Oesen. I'm Managing Director with CohnReznick Capital. I run our West Coast practice out of San Francisco. Been with the firm for about 7 years. My background is in investment banking and renewable energy development, both in the US and abroad in Europe. CohnReznick Capital is an investment bank almost entirely devoted to renewable energy and sustainability. I spend about half of my time focused on project financing. So that's raising tax equity, debt, sponsor equity for wind, solar, storage projects. We also do work in the carbon capture tax credit space. And then the other half of what I do is a little more traditional investment banking. So corporate M&A, bond deals, things of that nature.
Excellent. Well, we're really excited to have your perspective on the renewables marketplace and financing and funding trends in that space. So we'll have a wide-ranging discussion. We've got 15 minutes, so we'll try and make them all count. And I wanted to maybe start with just kind of a big picture one of where do you see the U.S. in terms of relative to its carbon reduction goals? Do you think we're on track to meet those? Do you have any thoughts on trajectory?
So I don't want to start it out negative, but no, I don't. I don't think we're on track. I think there's some fundamental components of the industry that make that extremely difficult, namely upgrades to the grid, storage mandates, and transmission lines. I do think some of the policies currently under consideration help facilitate this transaction, especially tax credits or incentives for transmission and storage projects, direct pay optionality for renewable energy projects. But it remains to be seen what gets passed, how all of this is implemented, what this actually looks like. That being said, I mean, there are extremely strong tailwinds promoting the industry. There's strong momentum. A lot of investors are looking at the space. Certainly from the banking side, we have our work cut out for us to get this degree of projects financed. It's going to be a lot, but that's what makes it fun to be in the space and really help influence this major energy transition.
Awesome. Well, I want to get to some of those banking themes in a minute. But maybe to stick with the macro just for one more question here. You had mentioned, maybe there being some risk of not getting there on the goals. If you think about maybe drilling down a little bit, you think about the different segments of the renewables picture, be it solar, maybe offshore wind, storage you mentioned. Where do you see some of the biggest specific challenges and maybe bottlenecks to hitting these state and federal mandates?
Yeah, so look, I mean, on the federal level, the ones I touched on are the ones that give me the most pause, right? Storage, transmission, federal support, federal tax policy, all of that is highly impactful. State and locally, I mean, distributed generation and the next era of how energy is delivered to consumers is having a significant impact in our ability to meet these goals. Look at community solar gardens that are popping up and policy is popping up in states across the US. Look at community choice aggregators in California that have delivered a fundamental shift on how consumers are getting their electricity. It's really exciting. It's providing consumers across, all living situations and all different economic situations, access to clean, affordable, renewable energy. And that's a really exciting aspect that's going on right now. From a banking side, I would certainly prefer a little bit more standardization across all of these programs. It's a little bit tough that each state is kind of reinventing the wheel on how they want to do this. But that's a huge part of why we do so much work in the space. It's really kind of how to distill all of the different mandates and different policies into one single investment to allow investors to kind of achieve that standardization. So.
Gotcha. I know one area that needs standardization as well as ESG and ESG reporting. There's a lot of work obviously being done around that. And I know that's ESG is a theme in every industry now, but it's obviously particularly critical in renewables to tell that story. So in your role banking the space, how do you work with and sort of guide clients through the capital market shift around ESG?
So it starts with fundamentally who we are as a firm. We've been driven by ESG and sustainability since inception. Our group is incredibly passionate about the space. Renewables is something we live and breathe every day. It's so deep in our commitment, and we're very much in the weeds. We also walk the walk. We're one of, I believe, the only renewable energy investment banks with a woman equity owner. We very carefully track our recruiting and retention goals, ensuring we have a diverse workforce, strong group of employees, and it pays off in being a really great place to work that then shines through to our clients. As far as the services we're providing our clients, it's finance advisory, M&A advisory, predominantly for those looking to get into the renewable energy markets, whether it's helping developers and IPPs raise capital for projects, helping figure out the tax structuring for carbon capture projects, or helping investors kind of navigate a new entrance into the space. Folks that really want to make an impact on their ESG exposure often look at renewables, and we help these groups, whether it's insurance, financials, tech companies, corporates, seeing how they want to invest in the space.
Well, let's jump into some of those kind of investing trends a little bit. I wanted to hit on kind of the project finance outlook while we've got you. Working hand in hand with these companies that are out there raising capital as you are. I know everyone at this conference, and we've got them too, has seen the chart showing that sort of hockey stick growth curve in renewables. If you look at fund flows or deal counts, basically every metric is surging up and to the right? So we've all seen those, but I wanted to ask you, what is something about these fund flows into renewables that might be surprising to folks, maybe a misconception or just anything maybe out of the ordinary that you come across in your work that you think is interesting?
Well, I mean, it's not terribly simple to make the move into renewables, besides the intense complexities of energy markets where you've got basis risk or offtake contracts or hedges or all of these different components. Then you add on top of that an extremely complicated project financing structure, including the tax equity. And we're helping a lot of groups that are looking to get into the tax equity space. It's a really interesting way to add significant kind of additionality and really be the delta between whether projects are getting built or not. There is a supply and demand imbalance there. So in order to achieve that hockey stick, we are going to need more investment or potentially a shift in policy. But trying to walk people through how tax equity works, I spend a lot of my time doing that, especially with kind of foreign investors that aren't used to the space or new entrants that haven't seen it before. And we are a subsidiary of an accounting firm, CohnReznick, which is actually super helpful when we're doing this because we can kind of call on them to do the deep dives into HLBV accounting, earnings impacts, all of those components. So that sheer complexity is something that people aren't always prepared for when entering the U.S. renewables market.
Gotcha. Yeah, that's a good one to track and watch. You mentioned the supply demand imbalance on the money side. Do you think that the availability of financing can keep up with demand over, say, the next 5 years? Do you see that being a problem?
I do see it as a problem. There is an imbalance as of now. What I will say is that the industry has somehow managed to get it all done to date. And, whether it's new entrants constantly coming into the market or some of the larger investors really increasing their exposure, it is a scrappy industry and we've always gotten it done. But with some of these projections, it's going to be tough. And I think, there are some policy components that are being considered that could be helpful. And also these new entrants, right? We're starting to see more and more insurance companies participate in tax equity. A lot of the tech companies have had kind of an interesting path into the space where they started off procuring renewable energy through PPAs and are now actually also investing in the tax space, which is really, really helpful and meaningful as far as getting these projects built. So we highly encourage, any groups that do have earnings that could be offset to take a look at this. It is a really interesting investment area that has really meaningful impact on the space.
Right, and you had mentioned that there's new investors coming in all the time. I mean, even, I guess clean energy is sort of new and old, right? I mean, it's been around for a long time, but the kind of scale that we're talking about, maybe going back to like 2015, 2016, through present day is unprecedented. And so everyone's sort of rushing in. At Liam Research, we advise a lot of institutional investor clients, and a lot of these guys were they're energy specialists, but that to them historically has meant oil field. And so they're coming into renewables with sort of fresh eyes. But whenever you have a rush like this, as you know, Britta, that there is sort of this risk of not fully understanding, right? And so what do you think for new investors, new companies to the space, what are some of the key risks that they need to keep in mind as they're entering renewables, say for the first time?
Yeah, well, I mean, it is on those multiple levels, right? Whenever we're working with a new investor, we really try to sit down and figure out what is their goal, what is their fundamental risk appetite, what are their return requirements, and we've had a lot of those conversations where we have had to frankly say, this is not realistic. You are not going to be able to deploy your capital at those returns in this space. It's just too competitive. And then we kind of help them shift that view of looking, all right, well, here's a peripheral, maybe you look more on the debt side or the lending side, or again, on the tax equity side, or maybe it's a technology play, maybe it's a platform play as opposed to, pure infrastructure. So there's a lot of different components to it. I think, adding on to that, the complexities that we touched on of energy markets as a whole, and then the financing complications. It's a lot for groups to take on.
Right. And so that's coming at it from the investor perspective. As you're advising companies in the space who are maybe going out to investors, maybe they're not used to doing that. Maybe they're startups or new, or maybe they're established, but they're tapping into, like you said, the tax equity or new sources of capital. What do you think some things to keep in mind would be for those kinds of market participants?
Yeah, it's certainly a fun time to be an independent solar or wind developer these days. I think the number of inbounds folks are getting from groups looking to deploy capital is pretty high, and valuations are very high. And there's just kind of this overall booming M&A market that's going on, which again, as a banker, is super fun. I think so far this year we've sold First Solar, 7X, and Pivot Energy. So, a lot of platform deals happening. When we work with those groups, a lot of the advice we give them is to, don't necessarily just get excited by an inbound. You want to make sure that you've vetted that and understand if that valuation is market, given how competitive it is today. But the things that they need to be really thinking about when they're presenting to investors is, how does this arms race of everyone trying to get capital behind them, how does that really allow their platform to be diversified from all of the other developers? What is their differentiating factor? How are they achieving the growth and the scale? How does this capital actually make that impact, move them to, a 3 times, a 10 times gigawatts of what they were doing annually? And then, it's great to have the capital behind you, but if that capital doesn't see the world the same way as you do from a risk appetite perspective, it does you no good, because you can't deploy that capital. And so that kind of cultural fit, risk aversion, risk understanding is really a critical component right now. Frankly, it's not that hard to raise the money right now, but making sure it's the right partner and the right cultural fit is absolutely critical in being able to achieve your goals. So.
Great point. You mentioned one thing in that the statement there, and that's great color, that I just wanted to follow up on. You talked about platform deals, and I'm just curious, over the next 2 to 3 years, do you see the volume of platform deals versus asset deals being skewed one way or another? Do you see more appetite? for platform type transactions?
Yeah, right now like I said, there's kind of this arms race on the platform side where the investors are all looking to kind of pick their horse and put their capital behind a specific group. It's a great way to be locking up pipeline right now. It's a great way to be making headlines if you're, a public company or looking to influence your investors that you are taking ESG seriously. Some of the platform headlines are certainly splashy and a big deal. There is going to be this, I think this will continue for a good 18 months, maybe 2 years, of being strong. There's certainly a lot of independent groups still out there that, that are having conversations and figuring out what this looks like. But to your point, it does lead to an interesting kind of dichotomy there of, if the traditional develop and sell groups all get picked up by someone who then wants to hold the asset, what does that do to the market for NTP assets that are normally sold to the infrastructure players? And I think there may be a lot more competition in that space and some interesting kind of shifts. I think sell downs of equity stakes will continue to be a really strong business model for those who have a competitive cost of capital. But you might need to see a little bit more creativity from some of these infrastructure players on how they actually purchase the assets, because if that market has shrunk, there'll be an interesting shift there.
Excellent. Well, we'll be tracking your clients to see what you're telling them to do as they print their headlines after they do the deals. So maybe to wrap things up, just kind of zooming back out to the big picture with one last one, because I know we're up against it on time, but big picture, looking out the next 10 years, crystal ball time, what are sort of the bright spots you see in renewables, and maybe the 1 or 2 biggest challenges that the industry's got to jump over?
Oh, geez. I mean, the tailwinds right now, it's such a fun time to be in the industry. I've been doing this for a long time, and we always have kind of our starts and stops, and there's always something looming on the policy side that's going to be a fundamental shift in the market. But it really does feel like right now the industry has incredible tailwinds and a lot of support. Costs have come incredibly down. It's a very competitive cost of energy. So overall, I feel very positive about the industry. I think we're going to continue to see incredible growth. I think it's, all the way from the federal to the local level, we're going to see increased support and, jobs creation and access to renewable and clean energy across all types of consumers, which is really, really exciting to me. But look, there are some fundamental hurdles that we have to get through, and whether those are fixed on the federal policy side or the local side, I don't know. But storage and transmission are probably the two that make me the most nervous as far as the macro goals are concerned. And I think there are a lot of policies in discussion right now that can go a long way to helping those. So that's kind of my view, but overall positive, but a lot of work to do.
Great. Well, we'll roll up our sleeves. Britta, thank you so much for your time. Really appreciate you sharing your views.
Anytime.